please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call.
Morning Call. I'm Lata Venkatesh. With me are Anuj and Sonia. Well, you heard all that and that GST collection coming in at 80,000 crore for November is going to be a bit of a dampener because bond markets will worry whether there will be a little bit of borrowing from the central government because of the shortfall. The other negative the market starts with is the way crude has surged now to over $66 because of yet another pipeline problem, this time in Libya. But my point is this may at best slow the bulls. The bulls are on too much of a rampage. So perhaps there is a bit of a speed breaker, but I don't know whether a major reversal is on the anvil in the markets. Morning.
Hi, morning. Yes, in fact, the market has been climbing every wall of worry really well so far. And you can see it in the numbers, right? I mean, look at the domestic institution buying. We've seen 7 consecutive trading sessions where DIIs have bought. And yesterday, the numbers were pretty good as well. I mean, they bought about 544 crores just in one trading session. So put together, that's almost 5,000 crores of buying from DIIs in 7 trading sessions. Anuj, morning. Whatever the negative news flow, this market is making sure it overcomes that.
Morning, Sonia. You know, when we were in college and the New Year parties used to happen, we would worry about the hangover and all for later.
That didn't stop you from drinking.
The party continues.
The party continues. So this morning, in fact, on my Facebook Live, I kept a topic. Party yun hi chalegi. It's like, look, the market right now in that phase. Let's bring in the cricket analogy here. It's almost like a Kanpur wicket, 4th or 5th day, and let's say James Anderson and Stuart Broad bowling and not getting any reverse swing. Virat Kohli is batting. What will he do? He'll keep hitting the ball, keep smashing the balls, and that's what you got to do. Look, the market is really charitable. Right now, the market is charitable, and when these days the market is really charitable. Right now, the market is charitable, and when these days come, at the end of the day, runs on board are runs on board. It doesn't matter. Right now, money in your account will be money in your account. Got to participate. The momentum is so much with the bulls. Yesterday, the biggest gainers were actually the ones where we thought crude oil would actually negatively impact. The aviation companies, the paint company, they were actually the biggest gainers yesterday. So, and the DI volume yesterday was more than double of FIIs. Normally, FI volume is double of DIIs, and that should happen up until the first maybe. And
because
second onwards, exactly.
Not
second onwards, they'll come back from leave, and all this NAV management that we keep talking about. That, of course, maybe is a bit of an abused term, but it happens. The last week normally is good.
Yeah.
So my sense is that the mid-cap market is set for 2 more days of big party. Today as well and tomorrow as well, and you have to participate in this. The mid-cap index this year is now up 46%. The Sensex is up 28%. So I don't know if the mid-cap index wants to score a half century and be up 50% for the year. The only problem for this market, or one of the problems for this market, is that the Bank Nifty has started to underperform. It's up 1% this month, while the Nifty is up 3%. And in fact, since August, the Bank Nifty hasn't moved anywhere. It's up only 2%. So in the last 5 months, the Bank Nifty hasn't done anything, while the mid-cap market has moved on clearly. And of course, once the new year starts, we'll see if the crude oil is still holding above 66, 67, because that right now represents the biggest risk to this market.
No, actually, you're right. The same thin volume, I think, would be impacting even crude markets.
Exactly.
With a slightly lower volume, you can ramp up the price.
Exactly.
So you have to wait and see.
These are, last time also when the pipeline issue happened, we thought that, all of a sudden crude is surging. In 2 days, it was back to 62, 63. So I think the market would want to see that and, see if it's 65 is new normal or not. If that's the case, then maybe you adjust to that. But
so, sorry to interrupt, just to come back to that point you were making about the party that goes on. We keep getting questions on Twitter, queries on Twitter every day. The most, often asked question is it too late to enter this party?
Yeah, it's, it's a tough one. But I would say one thing. I think today, tomorrow, if you get your sort of stocks right, and if you get your risk management right, you don't necessarily participate in this market via futures. You can do it via options because you're just 2 days away from expiry. Tomorrow is expiry, right? So you may want to participate in this market via call options if you are too afraid to go all in and play via futures. If that is the case, it's still not too late because all you lose is just some bit of option premium. And if the call really works, then it really works wonder for you, like it happened yesterday in so many stocks. So I don't think it's still too late. It may be late if your horizon is only till January end. if otherwise, I think this bull run has some legs
It's
to go.
possible that people who are chatting with Sonia are not as savvy as you are, as your answer is. They may not be option traders. They may be actually people who want to put money, investors. They're the last guys to know that there is a party out there and they have missed the bus. I would think for them, you have to stay with quality. That is the big advice I would give people, because a lot of leveraged stocks have been rising, and because you want to be in the mid-cap party, you should not end up buying those 20 rupee stocks, that 17 and 20 rupee stocks, because they look attractive and they have risen 10% yesterday or 10% in the last 1 week. That is the big thing you have to take care of. One, don't get into stocks where there is too much leverage and where the balance sheet is under repair. Two, go into quality stocks. The only thing is, when you enter at this level, you have to wait for a longer period for it to give you money. At higher valuations, you make money, but you have to wait longer. And third, please stick with mutual funds. I mean, if you have only now realized that, should I go or enter the party, clearly you're not, among the savviest. So perhaps you must allow the fund manager to make decisions for you.
Okay, in fact, we do have a lot of wise experts who are going to tell us what you should be doing at these elevated levels in the market. Talking about fund managers, mutual funds, Gautam Duggad of Motilal Oswal Securities says, in their note on contrarian investing in August, they had indicated several anomalies in stock positioning amongst Nifty stocks. Interestingly, these anomalies have delivered impressive returns. A simple strategy of investing in stocks where an analyst consensus has changed from net sell to net buy with a holding period of 1 year can deliver phenomenal returns of 23.9%. Gautam adds that among the BSE 100 stocks, Marico, PNB, United Spirits and Dr. Reddy's have turned net buy from net sell in October, November. In addition to the above stocks, Bharti Infratel, HDFC Bank, Infosys, Lupin, TCS and Tata Power are positioned differently compared to their most likely position.
Okay. Well, money market views important today because of two developments, crude as well as the GST collections coming less than expected or less than previous months. First on the rupee, Pramit Brahmabat of Veracity expects the rupee to float in a narrow range in the absence of any directional cues, expects the rupee to trade in a range of 63.80, 64.20 against the dollar today, but could be it will remain above 64 because of crude. But on the bonds, watch out. This advice comes from Dhaval Dalal of Edelweiss. He says the benchmark 10-year bond yield has been consolidating in a range between 7.25 and 7.3 with thin trading volume. The incremental supply also been absorbed without significant devolvement. He believes this may be a good sign and may show the market participants are comfortable with current levels with all negative news priced in. Dhaval expects the arrival of the new 10-year bond next month to offer further cues in terms of direction.
Okay, over to Nigel now for the world view.
Well, volumes are on the lower side given that it was a day after Christmas. In fact, we did have the key indices that ended in the red in yesterday's trading session from the US markets. But the Nasdaq was a relative underperformer. Remember, Apple was under pressure yesterday. It was down close to around 2.5% on unconfirmed reports that the company may cut the sales forecast for the iPhone X by around 40%. So that's what really created a bit of a flutter, and that's what led those indices to see some selling pressure in trade. Well, Apple's losses were offset to some extent because energy stocks gained. Remember, crude oil prices moved higher. Overnight, in fact, we had an explosion in Libya, and that's what supported prices over there. So energy stocks did well. Even retailers did pretty well in yesterday's trading session. In fact, some of those retail-based ETFs, they reached the highest levels we've seen in the last 1 year. A couple of them up for you on the screen. Well, major European markets, they were closed for trade, so lucky them. But Asian markets have opened up this morning, and they have opened up mixed. The Nikkei is holding more or less in the green, while in fact the Kospi is a relative underperformer in trade today. Some of those stocks are related to Apple. On the back of that unconfirmed report, they are seeing some selling pressure today. And the SGX Nifty indicating a flattish start to a mildly negative start. Back to you all.
Okay, thank you very much for that, Nigel. And the big story this morning, crude realities for Indian markets. Oil prices are heading north with crude prices at their highest level in 2.5 years after that explosion in Libya that Nigel spoke about. Jonathan Barrett of Ayers Alliance joins us now. Good morning, Jonathan. Thank you very much for stopping by. Well, is this something, over $66, $67 in Brent, is that passing problems because of the explosion? Do you see it settle back under 65?
Well, good morning. I think I would like to see it settle back to 65. There's no doubt about it. But I guess what the explosions actually said to us, that anything that's going to cause an issue in that supply is going to be just played out into the market quite quickly. Remember what happened with the 40s pipeline? That's still off tap at the moment. We are expecting that to come back and to produce some more oil. But when you see what's happened in Libya all of a sudden, then I think people will say, well, look, there's not a lot of volume. We've got holiday trade-ins. Therefore, we think it'll be an impact and prices will go higher. So I think at the moment, prices will remain relatively firm.
Okay, Jonathan, good morning. You know, crude prices have been on the rise ever since OPEC decided to extend those output cuts. Does the global demand supply look evenly balanced now, or do you think that we are, we could see some more production cuts by the OPEC?
Well, I don't think we're going to see more production cuts from OPEC. I think within the OPEC-Russian alliance, I think Russia is the one that will say, well, OK, we're going to opt out of the supply cuts. But I think that when you look at it, OPEC have been quite resolute in terms of keeping those supply cuts up to keep the market higher. Remember, when you look at the profitability of OPEC nations over the last 5 to 10 years, they've dramatically dropped quite considerably. So OPEC would be looking to reverse that trend by keeping prices higher. Also note that obviously Saudi Arabia is going to float its own industry there. Aramco is going to be floated this year, so naturally they want to see higher prices. So I think if anything, prices will remain relatively well bid, particularly for the first quarter of 2018.
Okay, in that case, what is well bid, Jonathan? What would you expect in the Jan-March quarter? What, if you can guess, even the April-June quarter?
Yeah, well, what I think the main thing is that if we probably see prices back up through that US $70, to me that's a bit of a concern. We have a natural gap in between for those oil shale producers when they come on tap, and to me that's a concern because a supply issue will occur, prices will go up, and then to meet that supply we need more oil shale production. So that in itself is taking some time to come on track, but when that does come on, prices should be subdued, if not rebalancing towards more supply, which is what we want, and prices will then come down.
So supply has been tightened so far, and that's what's been supporting prices. You expect that to continue?
Well, I wanted to see more and more supply coming from oil shale producers. I wanted to see those rig counts starting to pick up quite dramatically more. I think that when we look at it, that is where we should be seeing that supply come from to help placate the market. Obviously, we've also got some weather concerns, particularly in the US, and that's obviously keeping a little bit of demand. But at the end of the day, I would like to see oil shale production continue to pick up. I'd like to see US production reach that magic 10 million barrels. And if we can see that, then I think that rebalancing will occur and prices should then come back.
Okay, so the range for Jan-March is what, 60, 70, 62, 70?
I think we're really looking 70 to 72.5 on the top side, 63, maybe 64 on the downside. We are trading a relatively bid tone at the moment, and that worries me because we have thin market conditions and the market might have a run to the top side.
All right. Jonathan Barrett, thank you very much for joining us with your thoughts this morning. A slight discomfort that 63, 64 to 70, 72, if that's the first quarter number for 2018.
Okay, that's crude. By the way, Bitcoin is up 16% once again. From hitting a low of 13,680, almost back to 16,000. So phenomenal on that.
Well, the US markets were under a bit of pressure overnight. So the SGX Nifty is also absolutely flat. As Nigel was telling us, Apple might be cutting its sales forecast for its iPhone X. I mean, at 1 lakh rupees an iPhone X in Mumbai, it's about time that, they realize how expensive it is and that people may not be buying it. But now they're cutting their sales forecast by 40%, Apple, that is. That's been the big story across the globe. But for our own markets, our research team is standing by to give you the list of top 10 stocks to watch for the day. Hi, guys. Bright and early this morning. Anuj, what are you looking at?
Yes, Sonia, before that, thank God for Chinese phones, 12,000 rupees and working fine for, many months now. But, I think for me, the stock of the day could well be once again Aban Offshore. It's why I say this again is because it's the only sort of direct crude play that we have right now.
You don't think
ONGC
Dolphin and
oil,
all are big enough?
No, Dolphin maybe you can say the entire offshore sector, but Aban of course is the biggest of them. So that's why it's it's trading at the cusp of a golden cross as well. The 50-day moving average is 196.8. The 200-day moving average is 196.6. The stock's at 199.
So when 50-day crosses 200-day, it's called
the golden cross, and normally stocks rally after that. And it's got good macro tailwind for starters. So that's why you could include the entire sector. Let's say Dolphin Offshore as well, maybe Oil India and ONGC as well. But there the problem is that at higher levels, the government policy is something which you don't know. So that is always a bit of a risk factor. So that's my first stock to watch. And the second stock for me to watch out for is Anantraj. It's a stock which had a huge jump in delivery volumes yesterday, and it's now breaking out of 5-year-long consolidation. We've been talking about the rally in the real estate. The mid-cap real estate, it started with the south, with the Bangalore-based market, but now it's spreading. And yesterday we saw a big rally in the NCR stocks as well. So Anantraj could be an interesting one to watch out for.
Okay. Well, definitely the stock of the morning could be JSPL, Nigel.
Well, that's right, Lata. In fact, the stock has had a big run, and true to their word, what the management told us here on CNBC-TV18 as well as in their con call, they've gone ahead and they've commissioned the 3 million ton oxygen plant that they said they would do in December. So a few days to go, they've kept their word. The capex, remember, that they laid out for years, nearly around 30,000 crores. Edelweiss, they've come out with a note. They believe that sales volumes will get a boost, and they're saying that now, in fact, the probability of them achieving 90 billion rupees in terms of an EBITDA in FY19 is definitely strong. Remember, they are a tad bit higher than what the street is working with. Couple of factors they've listed out. 6.5 million tons sales volumes is what they're looking forward to in FY19, and also cost of production could fall by nearly around 2,000 rupees per ton. That'll be good for them. The stock should open up in the green.
Okay, should open up in the green. That's JSPL, but the stock of yesterday and by a mile was Reliance Communication. And I tell you something, there was huge delivery buying. So yes, there was some trading interest in the stock, but someone was taking delivery home as well, and the rally could continue? I
would think so, because it's clearly a resolution, no two ways about that. And therefore, I wouldn't be surprised at all if, I mean, it's a very big resolution. Imagine 45,000 crore in the red, and suddenly all that has become green. It's a major swing that the stock is bound to see. So definitely green for Elcom, but a little bit of red may continue for the banks. And that's, the list of banks that have lent, because for the first 2 quarters at least they will have to provide. If the money comes in the third quarter, in the Jan-March quarter, they don't have to provide for that quarter. But key bankers at SBI, at IDBI told me that they have to provide for the 2 quarters, the September quarter and the December quarter for sure. And therefore a little bit of red on these stocks. Maybe not Canara, and Abhishek will tell you why. Abhishek, go ahead.
Well, Canara Bank has informed exchanges that it is looking to raise about 3,500 crores. So what this means in terms of mathematics for Canara Bank is that their Tier 1 ratio will improve by 100 basis points to close to 10.5%, while the book value can decline by anywhere between 4.2 to 4.7%. The Government of India holding will decline by about 8.7 to 9%. The total equity dilution can be about 15.5%, but green tick on the stock because capital will strengthen. Back to you.
Okay, Abhishek, thanks for that. So green tick perhaps on Canara Bank, but you're watching out for the NBFCs as well?
No, actually NBFCs and banks will be hurt by higher yields. Now, it's just logical that if the GST collection is lower, there is a confirmation of the expectation that from Jan 15th onwards, the weekly borrowing of the government may go up a bit. As of now, up until the first week of Jan, the government borrows 15,000 crore every week. From 5th Jan, the timetable is only 5,000 crore. So from the start, the market was expecting that that 5,000 will be scaled up because the government expects that it will fall short. With the GST number coming short, now the expectation will be that there could be a rise in borrowing, as well crude. Crude will mean, higher inflation numbers for December, for Jan. More than that, an RBI which will turn more cautious. So for all these reasons, yields could go to 7.3 back again, or even a little north of that. So that's a sentimental hit for NBFCs, and banks. Again, they've anyway not participated. So a little bit of red on that screen is possible.
Okay, a little bit of red is possible. Dishman is going to be in focus. There was news yesterday, Ekta?
Yes, absolutely. There was news on Dishman. In fact, it was an HDFC note which resulted in the stock spiking up around 5% odd. Now, the note basically indicates there is a leukemia molecule which is called crenelinib, and that is in Dishman's pipeline, and they have received fast track approval from the US FDA. So what that means is that Dishman will be manufacturing the API for this particular molecule. Fast track means that the drug's development will be expedited because of the importance of this particular drug in terms of treating a particular disease, and the phase 3 is scheduled to be completed by August 2019. Street is working with a late FY20, FY21 commercial launch. Why this is important is because generally you don't know the pipeline of molecules that a company such as Dishman is supplying APIs for. So this has come to light, and the importance of it will now start getting factored in to estimates.
Okay, thanks a lot for that. So we'll keep our eye out on Dishman Pharma. Was a big mover yesterday. But moving on to the real estate space, Prestige Estates is also on our radar. Sonal joins in to tell us why. Sonal?
Well, Prestige Estates will be in focus today because it has acquired complete stake in one of its associates for 324 crore rupees, and the associate has a land bank of around 180 acres. I spoke to some of the analysts. They say that they think the deal is fairly valued, and what do they plan to do with this associate is they want to develop affordable housing projects on the land, and the average realizations for the company have been around 6,200 per square feet mark, but for affordable housing it will be lesser than that, but we really need to know the exact number. But for today I expect the stock to be in green.
Okay, thank you very much, Sonal. Well, Manisha, tell us the lowdown on crude prices.
Well, Lata, you were discussing it earlier, and that's exactly where we are. The spike up in crude oil prices, as the street has been expecting before the year ends, is finally on the charts here. So 68 for the Brent and $60 for the US crude oil prices is where we are trading, 2.5-year highs on that. And the latest trigger, of course, has been the Libya pipeline explosion, which has cut out 90,000 barrels per day from that country. We already are dealing with the Fortress pipeline repairs. That is expected to restart only by the first week of 2018. The OPEC cuts are still on. The demand estimates from Europe, US and Asia are on the positive side, and the markets have been talking about rebalancing earlier, as early as first quarter rather than the third quarter that they were predicting earlier. Also seems to be pushing the prices higher. So we are now up 16% for the Brent prices, 12% up for the US crude oil prices, and we are getting into the new year on a very bullish note as we stand right now.
Okay, but all these crude plays don't seem to be concerned at all. Jet Airways sitting at a 7-year high in terms of a stock price. Thanks so much, Manisha, for that. But here's a quick recap of our top stocks for the day. Expected to gain today are names like JSPL, Reliance Communication, Aban Offshore, Anantraj, Canara Bank, Dishman Pharma and Prestige Estates, while stocks expected to be under pressure today, SBI, PNB, IDBI Bank, Bank of Baroda, Bank of India, HDFC, Bajaj Finance, India Bulls Housing, L&T Finance, M&M Finance, IOC, HPCL and BPCL.